What's up YouTube and welcome to a new video. 911 991 GT3 values are up by 45%, but as expected, values seem to be topping now. In my previous market update we namely already saw that there was no impact from the 992 introduction on 991 values. On the contrary, values soared. At the same time though, we already saw several signs that the majority of the price surge for the foreseeable future was behind us. And now this is confirmed. And that's also why I think that value-wise, now might not be the best moment to step into a 991 GT3. In this video we'll find out what happened in the GT3 market and where it might be heading into the future. As always, we will start with a market overview of today's US GT3 market so you know what's the situation. That graph is popping up right now and you can see that we have the model year on the horizontal axis and the price on the vertical axis. Also, you can see that the market is split by generation. The older GT3s are extremely rare. I only found one clean title 996 for sale and a handful 997.1s and .2s. It's remarkable by the way how large the price variation is in that market. Another thing which is remarkable is how close prices are to the 991.1 generation. A 997 has a median price of $160,000 and a 991.1 of $153,000. The 991.1 engine built quite a reputation for itself and that might still be haunting it. For one of the issues, Porsche announced a 10-year warranty and this might mean that people are reluctant to step into a 991.1 right now. The price step to a 991.2, for which the engine issues were addressed, is then also enormous. A .2 has a premium of $52,000. Prices also have a high variance. They start at $176,000 but go up to $300,000 for the touring version. But anyways, it's really the new 992 GT3 that's breaking records here. With a median price of $325,000, the premium to a low mileage 991.2 GT3 is well over $100,000. Prices are then also far above MSRP, which starts at $162,000. If we add 30% of the value in options, we end up at a price of $210,000, which is $115,000 below the current asking price. I know that demand is through the roof for these cars and that it's close to impossible to get an allocation. But are they really selling for these prices? It will be interesting to see how this unfolds. But let's now zoom into the 991 market and have a quick look at some market splits and the mileage sensitivities. An obvious one to look at is the split between the touring and non-touring cars. That's what we have over here. This reveals that supply for the touring remains relatively low at 15 cars. They also maintain a decent premium of $14,000 over the non-touring model. If we add one more split to this, the one between the automatics and the manuals, we can also see from the green dots that the median price for a 991.2 manual is around $10,000 more than for a 991.2 PDK. Yet, this difference can to some extent be explained by the difference in mileage. A manual tends to have a lower mileage than a PDK. And speaking about the mileage, let's have a look at the depreciation per 1000 miles driven before we have a look at the price developments over time. We can namely see that the 991.2 has a fairly low mileage sensitivity. Over here we have the depreciation per 1000 miles driven for the .2 touring and non-tourings and the .1s. And this shows us that the relationship between the mileage and the price is very low for the .1. They lose on average only 0.4% or $670 per 1000 miles driven. This is not just lower than the 0.9% of the .2, but also a lot lower than many of the other cars that I analyzed on the channel. So that's definitely a plus for the .1. You can also see that with 1% the touring has the highest mileage sensitivity, but also that the number of data points and therefore the reliability of that 1% number is quite low. Alright, but what happens then when we combine the model year view, what we saw earlier in the video, and the mileage view, what we just saw? Well, then we can see that the GT3 market is mainly driven by the mileage. And this might be a bit confusing because we just saw that the mileage sensitivity is very low for a .1 GT3. Yet, it means that within each GT3 generation, so the .1 and .2, the mileage is more important for the price than the model year, notwithstanding the fact that the mileage sensitivity itself can be low. Are you still with me here? Let's do a little recap before we move on to the price developments. We saw that the price difference between the GT3 generations differs a lot, but that prices really shoot up when you move from the 991.1 to the 991.2, as there's a premium of $52,000. From that point onwards they accelerate even further to the crazy price levels of the 992 GT3s. We then zoomed into the 991 market and saw that the touring and manuals go for a slight premium and that the mileage sensitivity was extremely low for the 991.1. Yet, when you look at other factors, it's still mainly the mileage that sets the price. And with that out of the way, it's time to have a look at the price developments over time and to dive a little bit deeper into today's video's topic. Why right now might be the worst moment to buy a GT3. You see, there are two components to this: the severity of the recent price increase and current supply levels. But before we dive into those, I would like to get your attention for today's video sponsor. Exclusive Auctions is a new auction platform that offers a hassle-free online buying and selling experience. There are many auction sites that claim to do this, but none go as far as Exclusive Auctions. Exclusive Auctions can take care of all the annoying parts that usually come along with buying and selling a vehicle online. Think about pre-purchase inspections, transportation options, and nationwide title and registration services. What's great about this platform is that you can select for yourself which services you want to take advantage of. Moreover, sellers can list and sell for free on the platform with the Gold Listing Package. The Gold Package includes a 30-day listing period, up to 100 photo uploads, flexible selling options, and much more. I think this platform makes it very attractive for sellers and buyers. Especially because the entire process will happen in a secure environment, as transaction funds can be held in an escrow account to make sure that both the buyer and the seller live up to their end of the agreement. You can click on the link in the video description and select the How It Works menu to check out all their services and see how everything works. If you want to list your vehicle, you simply create a membership account and submit your listing. But let's go back to the GT3 market now. Over here we have the 991 GT3 median price development over time. You can see that we have the development for the 991.2 Touring, non-Touring and 991.1. When we look at these developments, we can see that they are approximately the same. They follow this S-shaped pattern. Going from left to right, we can see that prices were relatively flat in 2020. Touring prices seem to be the exception to this, but that's because the price point in January 2020 is only based on 3 cars and therefore isn't representative. Yet, going into 2021, prices really accelerated like they did for the rest of the car market. They increased from top to bottom with 21, 24 and 17%. And this also reveals that the Dot 2 is clearly more popular than the Dot 1. The price increase is simply higher. However, since the summer of 2021, we can see a flattening in the price trend. Prices for the Touring didn't change and the Dot 2 non-Tourings increased with 3%. However, the latter price increase is not statistically confirmed, which means that it can be the result of chance. The only price change during the last 6 months that is statistically confirmed is the one in the Dot 1 market. Prices over there increased with 5%. That's not bad, but clearly less than the 17% increase that we saw before. So based on the price trends alone, we can see that the market changed from one in which prices are growing to one in which prices are more stable. Something which shows that demand and supply are relatively balanced. For the GT3 market, this is something that was not completely unexpected. We namely saw in the previous GT3 video that supply levels decreased drastically in 2020 and recovered or stabilized in the first half of 2021. Hence, with no change in demand, this was a pretty good indication that prices were about to stabilize. Let me show you the supply levels. Over here we have from left to right the supply, the median mileage and the median model year development. Here we can see that supply dropped drastically for the two major market segments, the Dot 1 and Dot 2 non-Tourings. Yet, after this big supply drop, the Dot 2s recovered quickly from 35 to 120 cars and supply for the Dot 1 stabilized. Something which for sure contributed to the stabilization in prices. Now it's difficult to pinpoint the reason for the supply increase in the Dot 2 market. Perhaps people saw the large price increase and figured it was a good moment to sell their car, also taking into account that the 992 GT3 was on its way. Nevertheless, more recently we can see that there are only some minor supply fluctuations in both markets, but that these are relatively small compared to the drop in 2020. If we have a quick peek then at the Touring market, we can see that the supply pattern is a bit different, as it shows an upward trend. There were hardly any Tourings for sale in January 2020. Yet, since last summer, supply hovered between 15 and 19 cars, something that of course helps to dampen the price increase in that market. We however need to keep in mind that stable prices are still quite a good thing if you're an owner of a 991 GT3. We can namely see from the median mileage development that this has been increasing, something which is natural as people tend to use their car, at least most of them. Anyways, we saw for example that Dot 2 non-Touring prices were more or less flat, but we can see here that the mileage in that market also increased with 2000 miles. So this basically means that you got 2000 free miles and only experienced a price decrease if you added more than 2000 miles. But let's start to pull everything together. Why is right now, from a value perspective, a bad moment to buy a 991 GT3? Well, in my opinion, the downside risk is a lot larger than the upwards potential. So let's explore this a little bit. Prices are influenced by supply and demand and are therefore a reflection of those two forces. Hence, the stable price development of the last 6 months shows that supply and demand are more or less aligned. Consequently, to see another large price increase like we saw in the beginning of 2021, we either need a large increase in demand or a large decrease in supply. Large demand increases can, for example, be triggered by decreasing interest rates or problems with the 992 GT3, something which in my opinion is unlikely. It's far more likely that things stay as they are or change towards the negative side, meaning a stable price development or a price decrease, at least for the foreseeable future. But let's explore now a few of these price drivers that can shift the market and why I think that they indicate a larger downside risk than upward potential. We start with the most difficult side, the demand side. You see, we can observe the prices and supply levels, and this means that there is one unknown, the demand. We can't observe this directly, but we can look back historically to see what drove prices for collectible cars. The late 80s and the beginning of the 90s saw, for example, a boom and bust in prices, fueled by a strong Japanese yen. The 2008 financial crisis saw a strong price decrease, and from 2012 onwards values recovered, following decreasing rates and a disappointing stock market performance, only to come down again in 2015 as values were inflated. There were many people in the market back then who only bought cars for investment purposes. More recently though, as we just saw, prices again increased significantly. Now these type of boom and bust patterns go especially for collectible cars over $100,000, so it covers the GT3 to some extent. Typically, the more expensive the car, the higher the chance that it's bought for investment purposes, the more likely it is that values are subjected to a boom and bust cycle. Now given the historical background that we just covered very quickly and the price drivers during the most recent years, we can make a non-exhaustive list of demand drivers. First of all, it is the ability to buy the car. This can either be fueled by low interest rates or an increase in disposable income. We saw that these factors drove demand historically and also during the pandemic. Looking forward, I think it's unlikely that we will see any interest rate decreases. Rather, I think it's more likely that interest rates will increase. Also, when it comes to disposable income, I think it's unlikely to increase significantly from levels which we are seeing now. These already increased a lot during the pandemic. Second, we have the emotional urge to buy such a car. First of all, it's clear that many governments are moving away from internal combustion engines, and this might well mean that petrol heads won't have that long anymore to order a brand new GT3 with an ICE engine. It's now or never, and I think that this played an important role in the recent price increase. Yet, this information is now also widespread and should be reflected in the prices. It's therefore unlikely that the impact of this effect will remain as strong as it's currently. Second, many people gained a lot of time during the pandemic as they started to work from home, and driving was in many countries one of the few activities which was allowed. Working from home seems to be here to stay, and many countries are loosening restrictions. So I think it's unlikely that these forces will continue to drive demand up. So what about the supply side then? We just saw that supply stabilized, and in line with the previous narrative, I think it's more likely that we will see a stable development going forward or even a slight increase. First of all, we have of course the new GT3. Allocations are scarce, but as time goes by, more and more cars will be produced and more 991s will be traded in for 992s, hereby increasing supply. Second, the 10-year free of charge engine warranty for the .1 GT3 is coming to an end. Hence, this might encourage current owners to sell the car, and this will in turn also impact things on the demand side. Third, now is one of the best moments to sell as prices are sky high. There might be many people out there who enjoyed the car for a few years and are ready to sell with no loss or even a profit, and this of course also drives supply up. So again, I see way more reasons for a price stabilization or a price decrease. I think it's unlikely that prices will continue to increase at the current rate. The list of arguments is loosely based on data, but not as much as what you usually see in the videos, and it's also not an exhaustive list. We for example didn't discuss that cars are in essence depreciating assets, and that with an average mileage increase between 2,000 and 3,000 miles per year, prices have a tendency to trend down. Anyways, I'm curious to hear your thoughts. Do you think that we will see a continuation of the trend, or do you expect prices to stabilize or even to decrease? Let me know your thoughts in the comment section. We will now wrap up and conclude. We started the video with an overview of the GT3 market, and this showed us that price premiums between the 991.1 and .2 are very large and that 992 GT3 prices are sky high. We then transitioned into the price development over time, and here we saw that the market shows an S-shaped development. The price trend is flattening and this is in line with what was expected. We then dived deeper into this and saw that supply levels stabilized, hereby confirming the price developments. Finally, I shared with you my thoughts on prices in the foreseeable future and why I think that now might not be the best moment to buy a GT3 if you look at it from a value perspective. I think there's more downside risk than upside reward, and in my opinion this is driven by the forces that drive demand and supply. And with that we arrive at the end of this video. Now if you enjoyed this data-driven way of analyzing car markets but would have liked to see the video for a different car, let me know the car for which you'd like to see an analysis down below in the comment section. Don't forget to subscribe and to click on the notification bell so you get actually notified when your requested analysis goes live. As always, thank you for watching and I hope to see you next week for a new video.